All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today we're going to talk about what happens when every last Bitcoin has been mined. And then we're going to talk about some other stuff as well. So I have talked about this on my channel previously, but never really went into too much detail about it. Also, I would like to thank all of you guys for nearly 15,000 subscribers. Really cool. So every individual subscriber I see when you guys subscribe, all YouTubers have analytics that are quite useful. And if you really, really want to help out a YouTuber like myself or any other channel, and I know it gets said a lot and it's really cringy, but like, share, and subscribe. I know that sounds so cringy, but liking makes the algorithm show your video more than other people. Subscribing, of course, is really good because then you gain subscribers. And sharing is probably actually the best thing you can do. It's totally free. You just hit the share button. You share it on social media, wherever you got, and then that shows it to hundreds of other people. So that's pretty cool. So let's just dive right into it. Bitcoin's blockchain hit a unique milestone on April 17th as a 17 millionth Bitcoin was mined. So if you're wondering why this number is significant, it's because there are only 4 million tokens left to mine before the 21 million Bitcoin cap is reached. However, the truth is that most people alive today are unlikely to see that happen. So Bitcoin's blockchain protocol makes mining more difficult as more miners join the pool. And the Bitcoin reward for mining a block also halves every 210,000 blocks. So as it stands, miners receive a 12.5 Bitcoin reward for unlocking a new block. So according to bitcoinblockhalf.com, the next reward halving will happen in May 2020, reducing the reward to 6.25 coins. Assuming that there are no changes to the protocol, the Bitcoin cap will be reached by 2140, 122 years from now. Nevertheless, it's taken just 9 years to mine 80% of the Bitcoin that will ever be available at a little over 520,000 blocks, as shown in the graph below. So, basically, yeah, 122 years it will take to mine these. So I think by then Bitcoin will be replaced by something much, much better. I mean, you got to admit, 122 years into the future is going to look totally different than what we have now. 122 years ago, we barely had the first combustion engine car on the streets, if at all. So what happens when we mine the last Bitcoin? Currently, miners are still heavily incentivized to mine in order to obtain increasingly more valuable Bitcoins as a reward before it reaches its capacity. But when the day comes that the 21 million cap is hit, there will be no more Bitcoin rewards for miners. However, transactions still need to be validated and stored on blocks in the blockchain, so miners will only benefit from transaction fees. So once that 21 million cap is hit, if you have a miner, let's say you got an ant miner or something like that, I know it's going to be 122 years in the future, so there'll probably be something totally different. But if you have an ant miner and there were 21 million Bitcoins in existence, you would still be paid Bitcoin because all the fees from the transaction of Bitcoin actually get paid to the miners now. They already do. So when there is a lot of usage of Bitcoin and a lot of fees, so when you're paying those $5, $10, $20 massive fees that we once had, those are actually going back to the miners. So as it stands, Bitcoin transactions are processed by the network in order to for the transaction fee associated to be that specific transaction. So the higher the fee, the more incentive there is for a miner to prioritize to be included in a block. I think yours to be included in a block it was supposed to be, but whatever. This could essentially be the lifeblood of miners in the next century once there are no more BTC tokens to be unlocked. This is laid out in the Satoshi Nakamoto's Bitcoin paper. So once a predetermined number of coins have entered circulation, the incentive can transition entirely to transaction fees and be completely inflation-free. So what could happen in between? So a major point to consider here is that there are more than 100 years to go before the last Bitcoin is created. So considering that it's just been short of 10 years since the Bitcoin's inception, a lot could happen during this time. As Nakamoto envisaged, nodes are responsible for maintaining the blockchain of verifying transactions. The move away from a trust-based system to a proof-of-work system that operates by consensus of the longest chain. The last sentence of that statement is particularly telling as miners and exchanges have had to operate in tandem at trying times in the last few years. So I suppose I better read that quote. The nodes vote with their CPU power, kind of, expressing their acceptance of valid blocks by working on extending them and rejecting invalid blocks by refusing to work on them. Any needed rules and incentives can be enforced with this consensus mechanism. So SegWit revisited. In 2017, the issue of scalability, block capacity, and transactions came to a head. Nakamoto implemented a 1 megabyte size limit for blocks in order to stop miners producing bigger blocks that were likely to be rejected by the network, which could have caused the blockchain to split. At the time, the limit was more than big enough due to the small amount of transactions and the fact that a change could be implemented at a later stage if need be. Nevertheless, concerns that were raised were eventually realized as Bitcoin grew in popularity. Bitcoin Core developers eventually came up with a solution known as segregated witness, commonly known as SegWit. So in essence, SegWit separates non-signature data from signature data of each transaction, greatly reducing transaction sizes stored on a block. Furthermore, it cancels out transaction malleability by removing signatures from transaction data, which paves the way for Lightning Network. SegWit was eventually implemented in August 2017 as major stakeholders from the largest mining pools and Bitcoin companies pushed for a solution to higher transaction fees caused by a backlog due to the block size limit. Some called for bolder measures, an increase in the block to 2 megabyte, called SegWit 2x. There were a number of issues, namely the lack of replay protection and the fact that the move would require a hard fork. Ultimately, the change was never implemented. The main caveat here is that the implementation of SegWit was possible due to the consensus of the Bitcoin community, just as Nakamoto pointed out in his white paper, where there were greater concerns like the shortcomings of SegWit 2x. The community was divided and the change was never implemented. So changes to the protocol. SegWit's implementation has been slow across the network. Big players like Coinbase and Bitfinex only introduced the change in February. So the launch coincided with lowering transaction fees, a testament to the intended outcome of SegWit integration. As the following graph shows, transaction fees have dropped considerably in the past few months as SegWit continues to be implemented to nodes around the world. So you can see it going up, going up, going up, boom, and totally crushed. And this also has somewhat to do with the lack of use of Bitcoin, once the price crashed. But even still, it goes to show that it is lower than it was quite some time ago. SegWit's implementation also laid the foundation for second-layer solutions to further improve Bitcoin's network. The most anticipated is the Lightning Network, which will essentially do what SegWit has done, but on a grander scale. In layman's term, the Lightning Network will allow users to open up multiple payment channels between themselves off the blockchain, Bitcoin blockchain. The channel will be open and recorded on the blockchain, but transactions will be done off-chain until the payment channel is closed. In essence, users deposit Bitcoin into this channel and make transactions by transferring promise of ownership to each other. When they decide to close the channel, the users take the proportion of the total sum, and the ownership of those amounts is recorded on the blockchain. So to get an in-depth explanation, you can read Cointelegraph's Lightning Network guide. So what matters here is that the second layer solution will greatly increase the speed of transactions, therefore the network as a whole. So however, this does pose some interesting questions for miners in the future. Once all 21 million Bitcoin have been mined, transaction fees will be the only incentive for miners. So if the Lightning Network is fully integrated by this time, which probably will, there could be far less transactions being recorded on a daily basis. This could potentially affect the amount of money miners will be making from transactions. However, 100 years from now, it seems that likely all these problems will be answered by Bitcoin Core developers and the wider crypto community. So, yeah, so 122 years from now, we're going to see totally different things. I mean, Bitcoin might just be completely forgotten about in 122 years. Now, of course, everybody would like to think that it's going to continue on that long. And why not, as long as people are still using it. But I feel like by then we'll have something so dramatically different that Bitcoin will be just completely antiquated, if you will, and obsolete by then. So 3 altcoins that are outperforming Bitcoin for the week of May. So just in case you guys wanted some coins that are outperforming Bitcoin. So Z Classic is one of them, trading at 2150. This past week, a new development team announced on CNBC that they'd be forking ZCL with Bitcoin, creating the anonymous Bitcoin. It was televised, but I think that's Bitcoin private, if I'm not mistaken. So ZCL quickly rose to $40 before conflicting news was announced by prior ZCL dev teams regarding the inauthenticity of the fork. Z Classic doing pretty well. Engine also doing very well. So in case you guys are interested in that, we can take a look at Engine real quick. Why not? Engine coin at 15 cents. So it's doing okay. But as we can see, it's pretty okay. We got down to 8 cents and now at 15 cents. So basically doubled. And that's not too bad considering that Bitcoin has not doubled yet. Since the great dippening, if you will, in January, February. Excuse me. So Bitcoin got down to like 6,600 or so, and and now it's at just, we can call it 10 now. It's about 9 or so. But so that obviously isn't a doubling. So if you were to have bought in down here somewhere at 10 and got in at 15, 17 or so, almost a doubling of that. So some of these altcoins actually do quite a bit better than Bitcoin itself. And Z Classic as well is at 2075. And we could bring this back just a little bit here. We were at about $6, and now all the way up to $23. So if you had bought down in there, 5 times your money there is no joke. And the last one here is Digibyte. We can check Digibyte as well. Why not, Digibyte made it all the way down to 1 cent, 1.7 cents or so. It is now up to about 4 cents, so just about 4 times the amount as well. So it just goes to show that some of these altcoins are actually much more valuable than Bitcoin itself. And at one point, Digibyte was all the way up at 12 cents. So if you get it at 1 cent, buy a ton of it, and you can basically average that to about 2 cents, and then pawn it off at about 12 cents. That is pretty good. So taking a look at the buy markets percentage, we are looking at a somewhat of a dip here. So if this gets too much lower, it would be a pretty good time to buy. Now's not the greatest time to buy. You still might see some profits, but everything is kind of going a little bit down right now. As you can see, looking at the coin market cap, the market cap 454 billion. That's pretty good. But everything is kind of in the red. We got a lot of red anyway. So one of the top winners is Ethereum Classic, interestingly enough. And Fusion, Bitcoin Diamond are the losers of the day. So I'm not really going to get into the China crypto craze. But China is really trying to claw their way back into crypto. They have still kept on with crypto the entire time, but they are really starting to crawl back into the world slowly. So I'll put all these in the description below so that you can read them. So it is interesting to note that some of these altcoins, again, as I just said, that are worth investing in because they go up multiple times. So if you invest into a coin that's 1 cent and it goes to 5 cents, well, you think, well, what's 4 cents? But the thing is, if you put $100 into that, it goes up to 5 cents. So you now have $500. But with Bitcoin at 6,000 and you put in $100 and it goes to 9,000, you really didn't gain that much. You didn't double your money. You don't have $200 now. So it wasn't really a doubling at all. Maybe you have $150 now, which is great, but it's nowhere near on par with some of these altcoins because it's a lot easier for a coin to go from 1 cent to 5 cent or $1 to $10 than it is for Bitcoin to go from 10,000 to 20,000, that sort of thing. So I hope you guys enjoyed this episode, and as usual, I will see you guys next time.